And it's time now for an in-depth look at the global markets this afternoon. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on.
Thank you for having me.
Well, new doubts have been raised about the U.S. China trade deal allegedly struck last Friday. China says it wants another round of talks before it signs. Yesterday, stocks were down slightly on Wall Street. What's the story here?
Yes, as you heard, according to Donald Trump, the first phase was done, and the signing the document would take about next 3 to 5 weeks. So obviously, it's going to take quite some time. So because of that, I think that these kind of news will be hitting the market because of that long period. The China seems to say that they want another round of talks before signing the first phase one. It is unclear exactly what they really need to talk about, but one factor is that scrapping of all the tariff hikes scheduled for December. I think that we believe that will be most likely happen, but nevertheless, the Chinese market has shown some correction today. Shenzhen is down about 1%. The Shanghai is down about 0.5% or so. But we think that the needs for the deal is most likely by both countries. And the first phase will include some part of intellectual property rights, technology transfer, and financial market opening, and also purchase of 40 to 50 billion won worth of agricultural goods and pork from U.S. by China. So all that will be most likely to be signed next 3 to 5 weeks. It's just that because it's going to take some time, people will be quite curious of exactly what will be in the document.
Yeah, we'll have to wait and see about that. But in the meantime, it would seem that U.S. China trade is having an effect on the exchange rate here in Korea. The won's gained back a lot of strength against the dollar, almost back down to 11.80. What do you see happening in the days, weeks, months to come?
Right, as you said, Korean won has appreciated to 11.85 level. The peak was 12.23, so that's quite a significant appreciation since last several months. So what that means is that clearly the direction of the U.S. and China trade talk is going in the right direction, and that China will absorb or import more goods from overseas. That should be the positive news for Korea. Clearly, Korea has suffered quite significant amount of net export slowing significantly to the China due to these trade talk that's happening and the economic slowdown that you are seeing. And Chinese government is kind of allowing local entities to increase their market share rather than the foreign entities who are entering China. But obviously, with the appreciation of won, it's showing the signals that maybe the China will pick up in terms of the import goods, and that Korea might benefit from that process. We believe that the Korean won depreciation was overdone before when it hit the 12.23 level. We think the more reasonable exchange rate is somewhere between 11.50 to 11.80, based on the level of the economic strength and overall comparison between Korea, China, and U.S. And we do think that as the lower rates are expected from U.S. side, that October 30th, maybe another rate cut is likely. If that's the case, then dollar will probably moderately weaken further, which will result into further appreciation of Korean won.
Yeah, well, staying with that theme, the currency and interest rates, the Bank of Korea going to decide tomorrow on rates. What does the market think will happen, and will that be a big factor in stocks as well?
Sure. Because the current CD rates in Korea is about 1.55%. The core rates are 1.53. 3 years government bond rates are 1.3. So these numbers are indicating that maybe the rate cut's not going to happen this month. Given that the won appreciation is happening, also the U.S. rate cut versus now the Korea's rate will be pretty much similar. That's why I think that people are anticipating the further appreciation of won. But we'd like to see further rate cuts by BOK given the fact that there's continuation of slowdown in terms of the facility investment that's happening in Korea, we need to see chaebols to invest more and have a lower interest rate environment in order to boost the economic growth rates. A lot of people are saying that Korea can achieve 2% growth rate based on current intrinsic value. But we think that a lot of the activities have been slowing down because the sentiment is quite poor. We do think that the government needs to be much more aggressive in terms of the fiscal and monetary policy in order to pump up the economic growth rate. We do think, though, 2% growth rate is very achievable by the Korean government and Korean economy.
All right, got it. Mr. Yu, thank you. That's where we'll have to leave it today. We appreciate your insights, as always.
Thank you very much.